Good afternoon, everybody. My name is Linda Schenk and I'm the Executive Officer for Wine Communicators of Australia. Today we'll be hearing from the Wine Australia team. It's Peter Bailey, who is the Manager of Market Insights and #1 troublemaker, I would say, and Angelica Crabb, who is a Senior Analyst. Both of these people will be sharing with us today a summary of the 2020 vintage report and analysis of performance of export markets, including the impact of COVID on exports as at June 30, 2020. We'll be taking questions throughout the presentation. I think Peter and Angelica will pause to allow you some time to write in your questions. So to do that, there's a little Q&A button at the bottom of your screen. All you need to do is click on it and start typing and send it through. As usual, this webinar will be recorded and a link will be sent to you at a later date if you wish to watch it again at some other stage. But that's enough from me. I'll now hand you over to Peter Bailey.
Okay, thank you, Linda, for that great introduction in what is actually your very last webinar for Wine Communicators. So I understand you've done 50 webinars over the last couple of years, so fantastic job on that. And we're pretty proud to be the very last one before you go off and have a few beverages to celebrate the end of your time at Wine Communicators. So thank you, Linda. Today, Angelica and I will provide an update on the latest insights into supply and demand, the situation for Australian wine. I'm filling in for Sandy Hathaway, who's been unwell, and if she's listening in, also wish her a speedy recovery too. So I'll kick things off with the supply situation, starting with the global position and then drilling down into the results of the 2020 vintage report. Then after I've finished, we'll pause to answer any questions that you might have about supply. So as Linda said, just send them through as they come to mind as I'm talking. And then I'll hand over to Angelica, who will take us through the latest insights into the demand for Australian wine, with a keen focus on the export performances. So let's get cracking. Go to the first slide. So to start with, we're looking at the global supply and demand situation. So while many activities around the world have been brought to a halt by the COVID pandemic, grape growing and winemaking have continued around the world, and grape picking has finished in the Southern Hemisphere and is still to be completed in the Northern Hemisphere. A quick look at the major wine producing countries suggests a mixed result for 2020 for production, although it is a little too early to predict the Northern Hemisphere crops with any certainty. So looking at the Southern Hemisphere to start with, the main Southern Hemisphere wine producing countries, which are Argentina, Chile, Australia, New Zealand and South Africa, they were all in the middle of picking when COVID restrictions were rolled out to varying degrees in the different countries. Luckily, the harvest was allowed to continue and was relatively unaffected, apart from obviously changes to work practices to ensure social distancing was maintained. But overall, the 2020 harvest from the southern producers is expected to be lower than 2019, and that's mainly as a result of the prevailing dry conditions across most of those countries. Looking at the Northern Hemisphere to date, there's been few reports of issues affecting crop potential, meaning that the major producers are on track for at least an average season in 2020. But as I mentioned earlier, that is still pretty early days. But overall, our assessment is the combination of a reduced harvest in the Southern Hemisphere countries and an average size harvest in the Northern Hemisphere would mean a near average global harvest of around 26.7 billion litres. That's a fair bit of wine that we'll need to consume over the next few years. So how does the supply line up with expected consumption? The chart you see on the screen there shows that since 2013, global wine consumption has been fairly stable at around 24 billion litres every year, according to the IOV. In 2019, it was around 24.4 billion litres. The IOV does provide forecasts for 2020, but the IWSR, or the International Wine and Spirit Record, recently released their 2020 data set, which does forecast global wine consumption for the next 5 years. And for 2020, they forecast there will be a decrease in consumption across the world as a result of the pandemic and also the associated economic and social impacts of that, with declines in all of the top 10 wine consuming countries with the exception of the United States. So as you can see from that chart, there is a widening gap between demand, which is falling, and supply, which is increasing compared to the previous year. So this may put some downward pressure on bulk wine prices. According to CIATI, Australian bulk wine prices for the 3 major red varieties, Shiraz, Cabernet and Merlot, they all softened in July 2020 compared with the same month in the previous year, when you calculate that in US dollar terms. And the prices were well below the levels reached in the first half of 2018, which followed the record low global vintage of 2017. If you look at white varieties, generally they stayed the same or softened slightly, but they certainly haven't declined as much as the major reds since 2018. And then looking at the generic reds, although fetching a much lower price than the other reds, they did increase in value in July compared to the same time in 2019. And that was pretty close to matching its price that was reported in 2018. So that indicates this, relatively high current demand on the global wine market for Australian red wine at this price point at the moment. And comparing with other countries, except for the US, Australia had the highest global price recorded by CIATI for generic reds in July, and it's close to the highest prices for the other major reds. And higher prices generally indicate relatively strong demand, high quality and or short supply, but they can also make Australian wines less price competitive from a buyer's perspective. And in its July global market report, CIATI describes the bulk wine market as hesitant and conservative as a result of the anticipated softening in demand, and with the average to above average supply forecasts in 2020 for France, Spain and California, and also just the uncertainty regarding how both the coronavirus pandemic and international trade tensions will play out over the next few months. Now I'll move on to looking at the 2020 Australian wine grape crush. So it's estimated to be 1.52 million tonnes, which is the equivalent of just over 1 billion litres of Australian wine being produced this year. Now this makes it 12% lower than it was in 2019 and 13% lower than the long-term average, which is 1.75 million tonnes. So we've lost around 200,000 tonnes compared to the average in 2020. So it makes 2020 the smallest crop since 2007. But in terms of yield, it was very similar to 2010 when we had a crush of 1.61 million tonnes. But that said, the vineyard area back then was 4% higher than the current area. So we have lost some vineyard area over the last decade or so. It's not unexpected that we did have a lower crush this year. It was pretty much anticipated across the board, given the long-term drought conditions affecting much of Australia, which was compounded by bushfires and some smoke damage in some regions, as well as some frost, isolated frost, hail and flood events, which affected production throughout the year. And these difficult conditions inevitably took their toll on the crop potential. However, autumn temperatures were generally around average or slightly cooler, which led to some really ideal ripening and harvesting conditions, while the reduced yields resulted in more concentrated colours and flavours in the berries, which are expected to produce above average quality wines. So we might have less, but we know it's going to be some really great quality wines coming out of this 2020 vintage. I'll just briefly touch on the impact of bushfires. They did directly damage vineyards in a small number of regions in 2020, while a large number were affected by smoke damage. Wine Australia conducted a supplementary survey along with the National Vintage Survey this year, just to assess the effects of the bushfires on the crush. And the results from the smoke survey indicated that around 40,000 tonnes of wine grapes were lost, rejected or substantially downgraded as a result of smoke or fire. Now, while this represents considerable loss on an individual basis, overall it equates to just 3% of the national crush, meaning that bushfires did not have a significant impact as seasonal variation, weather events and drought. The next slide looks at red versus whites in terms of where the impact came. So the overall reduction of 200,000 tonnes lost was really split roughly 50-50 between reds and whites. Looking at the crush of reds, estimated to be down 11% compared with 19, while the white crush was down slightly more in percentage terms, down 13%. So this led to the overall white crush reducing its share of the total crop down to 45%, which is down from 46% in 19 and 48% in 2018. Now looking at the top 10 red and the top 10 white varieties, put those together, and they account for about 95% of the total crush in 2020. And that remaining 70,000 tonnes is actually made up of 63 red varieties and 51 white varieties. So it shows while Australia has a very diverse supply base, we're also very reliant on a small number of varieties. Just drill down now looking at the top 10 red varieties. Overall, excuse me, 7 of the top 10 red varieties saw tonnages decline in 2020. Merlot was down by the most in percentage terms, down by 20%, while Durif and Ruby Cabernet stood out as both those increased their crush by 9% and 8% respectively. Durif overtook Grenache to become the 7th largest red variety. Excuse me, I'm losing my voice. Just have some water. The estimated crush of Durif has more than doubled over the last 5 years. And its hectares also have grown, but its tonnes went from 6,000 tonnes in 15 to nearly 13,000 tonnes in 2020. And of the Durif, 3/4 is grown in the Riverina. And this is, the growth in the tonnages also reflect the growth in demand for Durif, especially in export markets, where exports of this variety increased by 22% in 2019, particularly to the US, which accounts for just over 1/3 of all Durif exports. Moving on to whites, the top 10 whites here. All but 2 of the top 10 white varieties decreased in 2020 compared with the previous year, with the exceptions being Pinot Grigio, which is almost identical as it was in 2019. But Prosecco increased by 2% and moved up into 9th position, overtaking Gewürztraminer. And more than half of the Prosecco we produce comes from the King Valley in Victoria. And Riesling, my favourite white variety, it suffered the biggest decrease, down 28% to 17,000 tonnes. And it's falling to number 8 in terms of the top 10. And this is the first time since 2001 that the crush of Riesling has fallen below 20,000 tonnes. So at its peak in 2005, we were crushing 40,000 tonnes of Riesling. And around 1/3 of that Riesling comes from Clare, with the Riverland, Riverina, Eden and Pathway the other significant contributors in terms of tonnages. So if you like a Riesling, we're going to have a little bit less to be consumed in over the next 12 months or so. Now I'll touch on Shiraz and Chardonnay. They are by far our 2 major varieties in terms of crush and vineyard area in Australia, so it's worthwhile just to compare the 2 of those. In 2020, the total tonnes of Chardonnay purchased was at the lowest recorded since 2001, and this comes despite 6 years of annual increases in the average price of Chardonnay. So while seasonal factors were the main driver, the decrease in Chardonnay was greater than that for Shiraz. And planting data for South Australia, which is the major region where Chardonnay is grown, has shown that hectares have declined by about 1,000 hectares since 2015. On the other hand, Shiraz area has increased by 1,700 hectares over that same time frame. And in 2020, Shiraz fared relatively well compared with the other varieties and increased its share by 1% of the overall red crush to 45%. So 45% of what we crush by red is Shiraz, but also a quarter of the total crush is Shiraz. Excuse me. Now looking at the sort of the regional results, South Australia accounted for an estimated 720,000 tonnes, or 47% of the national crush. And New South Wales was second, with 491,000, or just under a third, and then followed by Victoria with 263,000 tonnes, or 17%. The largest individual region by crush size in 2020 was the Riverland in South Australia, which accounted for 34% of the national vintage. And this is followed by Murray-Darling Swan Hill with a quarter and the Riverina with 20%. And all three of those large regions increased their share of the crush compared with 2019. Now, the yields in these three regions, which make up a combined 3/4 of the crush, were less affected than other regions, primarily due to the availability of supplementary water. And so together, these three regions were down by 4% in terms of their crush, while the remaining regions across Australia were down by 34%. And there was some individual variation within those regions. The fourth largest region in 2020 was McLaren Vale, which reported a larger crush than both Barossa Valley and Langham Creek for the first time since 2004. And according to the National Vineyard Scan, McLaren Vale has less area than Barossa, with 7,173 hectares compared to 11,156 hectares for the Barossa, and just over 6,000 hectares for Langhorne Creek. Margaret River jumped up 2 spots to become the 8th largest region by crush in Australia in 2020. And then outside of the top 10, the largest region in New South Wales was Carra, and the largest in Victoria outside the major regions was King Valley. And Tasmania, they reported 9,200 tonnes, and their vineyard area is 1,700 hectares, which again is taken from the National Vineyard Scan. Enough about the tonnages. I'll now move on talking about price, and I'll have another glass of water. Excuse me. So looking at this chart, shows the average price of wine grapes over the last 13 or 14 years. And it shows that the average price in 2020 was up 5% compared to 2019. And it has been increasing. You can see from that chart that since 2011, the average price has consistently grown. Reds have been growing at a slightly faster pace than whites over this period, and you can see that on the chart the gap is widening between the average price of red and white. Looking at the top 5 varieties, Shiraz increased by 2%, Chardonnay by 3%, Cabernet by 4%, Merlot by 4%, and Sauvignon Blanc. So even though the tonnages are down, we are getting some pretty strong increases in prices paid for those grapes. And of the top 10 reds, Grenache actually recorded the largest increase in price, up 25% to just over $1,000 per tonne. And in terms of whites, the standout in price growth was actually Muscat Gordo, which was up 17% on last year. Now, the survey enables us to cut and dice the data by region and variety, and there are literally hundreds of different combinations that we can report on, if my voice holds out. But since my voice won't hold out, I'll just touch on a couple of those. We'll look at Shiraz. So Shiraz increased in most of the major producing regions. So in the Riverland, up 13%, Murray-Darling Swan Hill up 11%, and Riverina up 5%. And in terms of the other regions, we had price increases in the Barossa by 13 and McLaren Vale as well. So it's really showing there is strong demand for Shiraz. And even with Chardonnay, with the crush down, prices were still up. So the Riverland was up 12%, Murray-Darling Swan Hill up 10%, and Riverina up 4%. Margaret River, the prices were flat compared to last year, so no increases in price there. But that probably reflects because the crush itself didn't decline in Margaret River. So prices were fairly flat. But Adelaide Hills, the fifth largest region, was up 3%. And if you look at some of the data that we have in that crush report, there's some really interesting results. And one of those is in 2020, for the first time in McLaren Vale, that Grenache achieved a higher average price than Shiraz. So it's quite kind of interesting. So I would encourage you to download the National Vintage Report from our website. If you're an Adelaide Crow supporter, I'm sure you'd rather spend a few hours reading this report than watch your team lose again, which is happening quite regularly.
Peter, if I could just interrupt you for a second, give your voice a little bit of a breather.
Thank you.
Which is interesting because it was fine before we started, but now, of course, any tickle won't help. But there has been a question come through. It was quite some time ago. I just didn't like to interrupt.
Sure.
And I'm not even sure if it's relevant anymore, but I'm going to tell you anyway. Could you please explain the metrics on how the Australian crush statistics are calculated?
How they're calculated?
Yeah.
Sure. So what we do, we send out a survey to all the wine producers. So within that, it's an Excel spreadsheet, and we ask them to provide their crush by region and variety, and we ask what they crushed from their own vineyards, but also what they purchased. So from the purchase data, we actually ask transactional data, so it's not an average. So every transaction that a winery purchases grapes from, we collect that data, which then enables us to calculate the average price of those grapes, but it also allows us to look at the dispersion of prices as well across the board. So not only can we do the average price, but we can show the dispersion by region and variety. So, and we get fairly good coverage. It does depend on the region. Some regions we have better coverage than others, but overall we have very good coverage. So of that estimated tonnes of 1.52, we would collect 90% of that. So we're only estimating a small proportion. And the way we estimate that final proportion is looking at the official results from levy revenues services, who collect levies from all wineries, and they actually collect the tonnes, and we compare that to what we had last year, and we're always very close to what those official stats are. So even though we do estimate, it's very, very close to what those official stats are. So hopefully that answers the question. Yep. I've only got one more slide before I hand over to Angelica, and this one shows the average export price versus the average wine grape purchase price over time. And what it shows, you can see from this chart, there's a very strong relationship between the average price paid for wine grapes and the average price of exports. And if you look at it over the last 9 years, so 2011 to 2020, the average export price has increased by 4% per annum, while the average grape price has increased by 6% per annum. So it does show that, the performances in the export markets do flow through to our grape prices. And even going back before, when exports were declining in terms of average price, so in that 7 years between 2004 and 11, where we did see that decline, export prices were declining by 7% per annum and grape prices by 9%. So it really shows that export demand is crucial to the health of the Australian wine and grape community. So if we perform and get really strong prices for our prices in export markets, it does show that it does flow through to grape prices eventually. That's where I'll leave it. Were there any other questions that came through?
Peter, I have a question for you while we're waiting for them to come through. It just takes a little while sometimes for people to type. I'm surprised that you said global consumption for 2020 is actually decreasing with the effects of COVID. So I'm surprised by that, because all the media says that Australians are definitely drinking more. So how can you explain that to me?
Yeah, so that is a global forecast from IWSR, and they look at all markets around the world. So market that includes France, Italy, and Spain. So they're the three biggest consuming countries in the world, but their consumption over time has been declining. So that really does impact on the global figures. So, and then within individual markets, wine consumption has held up in the face of COVID, but those forecast figures don't include the latest results about what's happening in market. So they were produced early days in COVID. So yeah, definitely, Angelica will touch on this, so I don't want to steal her thunder, but wine consumption has held up. And one of the main differences today compared to pre-COVID is it's how people are purchasing wine. So on-trade has been shut down in many markets around the world and hasn't recovered, even if it has reopened. But online is the space that's really taken off over the last 3 months. It has been growing for a number of years, but it's really COVID sort of fast-tracked the reliance on that as a channel. So, and also in terms of price point, we have seen a resurgence in sort of the commercial end, where people in some markets like the US, UK, and even here have been gravitating towards those bigger brands they know. But also, it hasn't meant that the premium end has declined at all. It's just meant we have seen that resurgence in the commercial end. And one of the things we saw early days was a massive increase in the sales of cask wines, for example. And I think there was a bit of panic buying there. It's people wanting to load up on as much wine as they could to get through. So that was, definitely there's been some changes in market behaviour. Whether those will continue and will become enduring changes, only time will tell. But that, we're pretty confident people still want to drink wine. They haven't walked away from that. But those figures that we mentioned earlier with that decline, that was taken from IWSR looking at overall across the globe. And as you saw on that chart, I can go back to it. The first one, consumption across the world has been pretty flat in volume terms over time, and the assessment from IWSR, given all the uncertainty across the world, their assessment is that we probably would see in some of these markets consumption decline. But that, as I would say, it is an estimate, and it's just trying to illustrate that there will be some pressure coming up in the next 12 months, and a lot of uncertainty around not only consumption but how supply plays out too.
And there's another question, Peter, and then we can pass over to Angelica. This person has said that they noticed a trend of younger wine consumers less than 40 years of age.
Yeah, my cohort.
Yeah, I'm not sure how I feel about that, but we're moving on. Turning towards medium-bodied reds away from full-bodied reds, such as Shiraz. Therefore, that would mean that domestic demand for Shiraz will continually decrease. Do you concur with that thinking?
We haven't seen, Shiraz has been one of the standouts in the domestic market for a number of years. So we haven't seen Shiraz decline in the domestic market. We've actually seen really strong growth in higher price points for Shiraz, and those sort of premium price points. So perhaps that might play out at lower price points, but at the moment in the domestic market, if you look at the off-trade stats from IRI, Shiraz is continuing to grow, and it's actually, it's overtaken Chardonnay as the #1 category, and I think it's probably getting close to overtaking Sauvignon Blanc in terms of growth as well in the domestic market. So, but that said, there is younger consumers are gravitating towards lower alcohol wines, so that may play out over time, but we're not seeing it yet. But it's one of those trends that we're continually tracking, is that whole lower alcohol trend that we're seeing, and the whole brand health, etc. So.
Great, thanks, Peter.
But stay tuned. On our market bulletins, we provide a lot of updates on these sort of trends. So as we get more information come to hand on these sort of trends, we'll definitely report on those. So if we do see, that start to play out in the domestic market, it'll show up in the figures, and we can report on those. So.
Great, thank you.
Okay. Well, I'll hand over to Angelica now. I'm sure her voice will hold up a lot better than mine. Yeah.
Hello, everyone. Let's hope my voice holds up. Thanks, Peter. So as Peter mentioned, I'll be covering the demand side of the equation of what's going on for Australian wine at the moment. And a lot of this analysis is available in our export report, which was released last week. And you can get that on the wineaustralia.com website. So let's see if I can get going here. So what it really boils down to at the moment for exports is there's two major forces that are influencing the numbers we're seeing at the moment. And the first one of those is supply. So that's, as Peter has just talked about, is that we've had 3 small vintages, and that's leading to a decline in volume in exports. And then on the other side of things, we've got the demand. So the global pandemic is wreaking havoc with wine markets, and it's affecting wine markets in really different ways. So some are demanding more wine and some are demanding less wine. So, and I'll talk more about that during my presentation. But starting out, just looking at a similar chart to what Peter just had, but this is wine grape crush volume versus export volume. And as you can see, they're really closely correlated. And so as our crush volume has declined, so has our export volume. So you had the record wine grape crush in 2017, and then we also in 2017-18 we had a record export year of export volume. So and then it's declined since then, and that's really highly correlated because we export about 62% of what we produce. So looking at the headline figures for this last financial year, really in the grand scheme of things, exports have held up really well. So overall value only declined by 1%. And that's really thanks to that increase in average value. So prices are holding up, and that increased by 9% to $3.89 per litre. And that's the highest since 2005. So almost all destinations in the top 10 declined by volume. But there were still some destinations that managed to increase in value. So you've got the UK that increased by 3%, and that's been a real turnaround for that market, and I'll talk more about that later. And we've got Singapore, Germany, and Denmark also managing to increase in value. The US was down slightly for the year, but only just slightly, and finished the year really strong, which I'll also talk about later. So the decline in China, that includes Hong Kong and Macau, and it's really Hong Kong that's driving that decline. Usually in the past couple of years, mainland China has been outweighing that decline to Hong Kong, but with COVID restrictions, it hasn't managed to do that as much, and I'll speak to more of that, to that in a second. So looking at performance by quarter, you can see that we started out the financial year really strong, and value grew compared to the year before. However, in the second half, value did decline compared to previous years. So value declined by 7% in Q3, and then down by 4%, so slightly better in Q4. And we all know what might have driven that, and that's the coronavirus pandemic. Looking at what areas of the world are driving these changes, we've actually got good growth in Europe and Southeast Asia, whereas Northeast Asia and North America have declined. This is year on year. So the value shipped to Europe was actually the highest since 2012. And shipments to Southeast Asia actually had a financial year record. So the UK, Germany, and Scandinavia were the countries that drove the European growth, and Singapore and Indonesia drove Southeast Asia. So China, including Hong Kong, is driving that Northeast Asia decline. And although North America finished the year strong, in both the US and Canada, overall for the year, it has declined. So looking at our top 5 markets, This is a rolling quarterly export values, the 3 months ending by month there on the bottom. And you'll see that in the past couple months, it's actually been pretty positive. So things look to be recovering, but it's a bit too early to say that. However, for China and Singapore, it is lower than it was last year. So if you look at June last year, we're still lower than we were, and so that's what's affecting those export figures. And really, if you put it very simplistically, you can divide these top 5 markets into 2 groups. So you've got those that have seen a decline in the 4th quarter, so China and Singapore, and that's most likely due to COVID restrictions. And then you've got the other group, so you've got the US, UK, and Canada, and they've actually benefited from COVID restrictions. So you've actually you see higher amount of exports going to those markets than we had a year ago. And one of the reasons for this is that in China and Singapore, you depend a lot on the on-trade for wine sales. And obviously we all know that the on-trade has been effectively shut for a few months, but starting to recover now. And then in the US, UK, and Canada, Australia has benefited along with the rest of the off-trade wine market from the stockpiling behaviour and the increased wine consumption at home, which is replacing that on-trade consumption. So the move away from on-premise sales is really benefiting Australian exports in these markets, in particular, the US, UK, and Canada, because we're actually underrepresented on wine lists in those countries. So it's actually benefiting us at the moment. So looking at the volume by container type quickly, even though we've had a decline in a volume available to export, the change in unpackaged versus glass, there hasn't been much change in unpackaged versus glass bottle share of exports. However, what has changed is the average value. So average value of exports has continually, thankfully, it has continued to grow. So the average value of bottled exports increased by 8% in the last year to $7.08 per litre. And that's really driven by the growth in exports at the high end of the price spectrum. So exports at $50 per litre and above. And the average value of unpackaged wine exports also increased by 8% to $1.31 per litre. And that's a level not seen since 2005. And that just shows you that Australian wine is in high demand, even though we've got less of it. And the markets that are driving these increases, and it's pleasing to see that it's actually most of the top markets. You've got bottled on the left and unpackaged on the right. And you can see that most of the markets are really driving these increases in average value, which is really good to see as volumes continue to decline, that we keep that value up and returns to the sector. So I'm just going to talk about each of the top 5 markets quickly. And we'll start with China, which is our #1 export market by value. And you'll see here, well, so overall for the year, we had exports to mainland China did increase slightly to 1.1 billion for the 2019 to 20 financial year. So on the 23rd of January, the first COVID-related measures restricting movement of people and closing non-essential businesses were implemented. So you can see here in the chart, quarters 3 and 4, that the pandemic has slowed the value growth in exports to mainland China. So in those last 2 quarters. And despite the recent quarterly decline in value, however, Australia remains the #1 imported wine category in mainland China and has performed better than our key competitors. So the import data shows that Australia has held a 38% share of the value of wine imported to mainland China, and that is well ahead of France at 28%, Chile at 13%, and Italy at 6%. So just looking at some wine intelligence survey data from during the lockdown in China, and they're reporting that wine is really still holding its own, while the purchase quantity of spirits have declined during the lockdown. And the minority of regular wine drinkers have cut back their wine consumption, while the majority have increased. And spend, which is on the right-hand side, spend by off-trade occasion has increased as well. And the online wine channel has been very strong in China previously and before the impacts of the virus. And the lockdown has only increased its reach and grip on some of the highest spending wine consumers. So what will happen post-virus? So it was the first country to be hit by COVID-19. So China is also the first country to start recovery, though this has come at a cost at a strict lockdown that has caused an economic contraction. Although smaller bars are now open, large clubs remain closed, and things are not back to normal yet, as many people are afraid to mingle. And so the most optimistic scenario is that things return to normal in the next few months, although the country is likely to remain largely sealed off to foreigners for longer, depending on how the pandemic evolves around the world. So Chinese New Year, which was the largest drinking occasion of the year, that was basically cancelled. So that has left retailers and consumers with large stocks of unopened alcohol that could take them a while to clear. And so that's what you're seeing in the export figures there. You've got to clear the stocks. So moving to the drinker behavior. So the Chinese are social drinkers, and they don't drink at home as much. So the social distancing measures are having a large impact, and it remains to be seen whether that will reflect in the long term or not. But as you can see here with the wine intelligence data, at least in the short term, people are planning to go out less. So it's being hard hit by the on-premise consumption, because on-premise wine consumption is 54% of the market. And if you compare that to Australia, it's actually 16% of the market. So that's the big difference there. And consumers also don't have that engagement with wine quite yet, where they see they're going into lockdown and they stockpile wine like we do here in Australia or other markets. So they don't quite have that relationship yet with it, so that you didn't see the stockpiling of wine happening. So moving on to Singapore, I've grouped Singapore in with China a bit because, as I said earlier, the on-trade measures affecting wine consumption are really similar there. So Singapore is our 5th most valuable export market. And after a large increase in Q2, so at the end of the calendar year, it was looking really good. And value has declined slightly in Q3 and 4, but it's still overall for the year grew by 13% in value, and volume actually also increased, so by 4% to 7 million litres. And exports to Singapore have a really high average value, so they're at a record level of $14.71 per litre. And that outranks Hong Kong, which used to be the number one by average value. So the pandemic has slowed momentum, and you can see that in Q4 it was down by 18% exports to Singapore. I must note before I move on that not all wine that is exported to Singapore is consumed there. It is a trade hub, and so Singapore tends to export about 50% of the wine that is shipped there. So just quickly on COVID restrictions, they did ease in June, but bars and nightclubs remain closed. And at first, they were really able to hold the virus at bay due to really strict testing and contact tracing, but now they're suffering through a second wave of local transmissions. So according to IWSR, the premium off-trade is actually struggling due to a decline in high-paid Western expats who were residing there. And they are now being replaced by lower-paid local expats from the neighboring Asian countries. And then, of course, on-premise is also being affected, as 34% of the wine is consumed there as well. However, there is less dependency on the channel than spirits and beer, as you can see. There's also less of a dependency on the on-trade channel than we have in China. So moving on to the US. We have not yet observed a negative impact on export figures due to the coronavirus to the US. So in 2019-20 financial year, the value of exports declined by 0.4%, so fairly even to the year before, really. And this chart illustrates that after declining by 12% in Q2, then the value of exports stabilized in Q3 and then increased in the fourth quarter by 14%. The increase in the fourth quarter came in price points below $7.50 per litre. So looking at the restrictions in the US, this map is current as of last week and it's changing all the time. But you can see that quite a few states have had to pause or reverse their reopening plans. And the US has had more COVID cases than any other country, but it's also the biggest wine market, so it's an important one to watch. And restrictions vary widely state by state. So if an exporter is exporting to the US, it may require a shift in focus depending on which states you're operating in. So California, Texas, and Florida, which are three of the biggest wine markets, had to move backwards in their reopening plans. So for instance, California has had to ban indoor dining again. Texas, bars have had to close and restaurants are at 50% occupancy. And in Florida, indoor dining is allowed, but bars have been banned from serving alcohol on the premises, so you can only do takeaway. And the other large wine market, New York, they went hard really early as it was the epicenter of the pandemic in the US, and now they are slowly reopening. So what effect has this had on the off-trade? So this is IRI data, and you can see that there was the stockpiling phase in March, April, and then now it's slowly trending back towards normal, I guess. And the key thing here is if you look at the by price point, you see this is pre-COVID here, that the bottom end of the market, so below $11 a bottle, was in decline, and that's a trend we've talked about for a long time, and that has really reversed. So post-COVID, now through July, those segments of the market are growing. But the important thing is also that the long-term premiumization trend has continued. So it's not like the top end of the market has declined. So above $11 a bottle US, you've actually seen that these are growing, and even at faster rates than they were before. So you've got two things going on. They're just consuming more wine of both the lower end and the higher end. Looking at the on-trade, the growth in the on-trade has leveled off in recent weeks as the coronavirus cases surged and some restrictions have been reintroduced. So things have really plateaued out to those consumers who are willing to go back. So you're not getting any more people going, oh, it's safer now, let's go out for a drink and a meal. So this data is based on surveys to consumers in Texas, Florida, and New York, which are the four biggest wine markets in the US. And some of the trends that we're seeing there is that red wine is the most popular drink amongst those who have consumed alcohol, followed by cocktails, domestic non-craft beer, and white wine. And drinks with food is the most popular occasion, which is good for wine consumption, and that's followed by relaxed or quiet drinks. And of those who have not visited the on-premise, they say they will do so when there's a vaccine or treatment available, or once the threat of COVID is completely gone. So those are the two most popular answers to the survey. What's really good to see is that 54% are drinking the same amount and 27% are drinking more. 27% are drinking more. So the majority of consumers haven't actually decreased their alcohol consumption. And just briefly looking at sales in the on-premise, in the week ended 29 July, sales were down about 28%, and that was total US on the year before. And that was up slightly from the week before, but I think those sales are now also starting to level off a little bit with the changes in restrictions. Moving on to Canada, so the other North American export destination and our fourth largest export market. Overall, for the year, exports did decline by 6% in value to 186 million for the year. However, that was in the first half of the financial year for the most part. It was partially offset by a 14% increase in the fourth quarter, and the growth in the fourth quarter was across all price points. Looking at wine intelligence data for Canada, here you can see that the restrictions on the on-trade have meant that people are consuming more frequently at home. So they are consuming more, but the spend has gone down. So, and that reflects the trend of consumers moving to a more commercial, big brands in the pandemic, things they know, just as they have in other markets, including Australia. And this is just some sales data from the liquor boards in Canada. And the chart represents percentage change from the same quarter in the previous year. And as you can see, in 2019, there was a move away from wine in Canada. And so consumers were moving towards craft beer, spirits, hard seltzers, and that was thanks to the health conscious trend, the cocktail culture. And so it wasn't looking good for wine, but it seems like the pandemic has a positive effect for wine for most of the major sources. But what I wanted to show is that this growth it's coming off of a very low base in 2019. So that the fact that everything declined in 2019 is really accentuating this growth there, but still good to see for wine producers. So moving to the UK as the last market I'll talk about, and it's a #1 export market by volume, and it really was the star performer in the last quarter of the financial year. So for the year, Australian wine exports to the UK increased by 3% in value, and that was despite a 2% reduction in volume. So you can see here, the chart shows that buyers' behaviour during the pandemic appears to have had a positive impact on Australian exports to the UK. After declining in the first 3 quarters, the value of exports increased by 43% in Q4. And Australia has been #1 in the UK off-trade for decades. So we are really benefiting from having quite a few well-known, trusted brands that consumers keep coming back to. So looking at the UK off-trade, they've been easing restrictions very slowly in the UK. And so this is IRI data here. On all, this is not just wine, not just alcohol, but it's all grocery. And you can see that there was a big stockpiling spike before lockdown. And then, but after that, it's actually stayed quite a bit higher than last year, and only just now starting to come down to normal levels. And what is driving that? So beer, wine, and spirits, alcohol are driving that high growth in sales. Now they are high value products, so that makes sense, but people are actually buying them a lot more. And so according to Wine Intelligence, UK regular wine consumers have increased their wine consumption more than making up for the lack of on-premise consumption. So they've actually gone above and beyond. They've also increased their consumption of wine without food within the home. And however, like Canada, spend has decreased. And the usage of online channels have increased significantly as well. So on the right, you've got year-on-year performance by in the off-trade by the country of origin. And as you can see, Australia still maintains its large share of the market. Although the percentage change isn't as high as the others, Australia is growing off a much higher base. And that makes Australia's performance in total value growth very similar to that of wines of the US and Italy. Looking quickly at what we have for the UK on trade, there isn't much, but collectively all the outlets as of the 20th of July were trading 28.5% down on the same week in the year before, and about 68% of the sites were open. And that's up from 60% in the week before that. So things are moving in the right direction. On the right, you've got on-trade sales by alcohol type. However, this is from before the pandemic, before shutdown. So it'll be interesting to see how returning to the on-trade will affect these numbers. As you can see, most of the categories were declining. And just sort of finish up, I wanted to show, to tie in supply and demand together, I wanted to look at all of our markets, including the domestic market. And on the left, we've got the previous financial year. So we've got 2018 to 19. And in that year, we sold about 1.3 billion litres worth of wine. And you can see that the domestic market was about 38% of that. And then if you look at an estimate, and this is an estimate of 2019-20, you can see that that a slightly more constrained supply situation has shifted where volume is sold slightly. But the key thing that I wanted to show here is that in 2020, as Pete mentioned, we're producing about 1 billion litres worth of wine from that vintage. So that loss of volume is going to come out of partially out of exports, partially out of the domestic market. We don't know what the balance there will be, but wine producers will be making decisions based on that. So there will be less wine around, which is why it's good to see that the average value is holding up, because our wine is still in demand. So just in summary, overall the demand for wine and wine consumption has held up in most markets around the world, which is really good to see. And the biggest impact has really been on how consumers have purchased the wine, with the shutdown of the on-premise and the shift to purchasing more wine online. In the off-trade, there has been growth across all price points, with a trend to premium and fine wine continuing. However, the trend of declining commercial wine sales have reversed. So wine businesses have had to pivot to new business models and innovate to reach their customers, new and existing. And Australian wine exports have held up well, considering everything going on, thanks to a growing average value. So this indicates that Australian wine is still high in demand, and buyers are willing to pay more for it. Our constrained supply will affect the domestic and export volume in the near future, and businesses will need to make decisions on what to do with the volume they do have. While some of the changes from the COVID-19 pandemic may not last, others I'm sure will endure. And the largest enduring change so far has been the increasing importance of e-commerce as a route to market. And this is already well developed in China, and other markets, including Australia and the US, are now expanding their e-commerce channels to reach customers. So the changing routes to markets are putting the traditional distribution models under threat, and how quickly the on-premise market recovers, together with how well wine producers adapt and embrace new distribution options, will determine the future state of Australian wine exports and domestic sales. And that's where I'll leave it. I don't know how much time we've got left for questions, but not much.
Thanks, Angelica. I will read out a few questions. If we could go back to Singapore and just clarify some components in there.
Yes.
You mentioned that 50% of the data or the increase came from re-export. Can you just clarify if that is the case?
No. So I just wanted to note that because yes, we've had an increase of exports to Singapore, but you just need to keep in mind when you're looking at exports to Singapore, some of that does get re-exported. So about 50% goes to other Asian markets because it's a hub. So what we've looked at recently is we're trying to dig into Singapore because it's hard because of that. But what we've found is that, yes, there's an increase in exports, but there also has been an increase in consumption of Australian wine. So we've been looking at a few sources. So there has been an increase. It's not all being re-exported. But yeah, I hope that just clarifies that a little bit.
No, great, thank you.
Yep.
Another question is, does Wine Australia have access to sales figures by region in China and the same in the States?
No, and then yes. So China, we don't have sales data. We have to go on our export data, our import data. We've got wine intelligence, but we don't have sales data for China. And I don't think anybody really has a reliable version. In the US, we certainly do. So we subscribe to RRI. We do put a quarterly report on our website that for levy payers that is available, and that breaks down by city, by region, how sales are going. And if you have any questions on that data, please flick us an email or call us, and we'll happy to go through that with you as well.
Cool. And another question, do you have any indication about whether the growth in US and the UK is a result of the same producers shifting their exports from China to US and UK, Canada, etc., or whether it's come from other opportunities to export?
I mean, I haven't looked exactly at whether it's shifting from China or not. It is something that might happen. Or that that exporters are thinking of. I haven't looked at that yet, but yeah, it is something that might happen. At the moment, we're just seeing that the exports to the US and the UK, it's really being driven by that off-trade growth, and some of our most popular brands in those countries, in those markets. Are driving that because we're well known for that. But yeah, it is certainly something that could happen. But that's if China keeps declining. I don't know if it will. If China recovers, then I would say no. So it's a kind of a wait and see game at the moment with how the COVID restrictions are going to affect exports coming forward.
New world. So thank you so much, Angelica. That's fantastic. Sorry, you want to say something?
No, all good.
Excellent. Well, look, I wanted to say thank you to you and Peter. It's always such a pleasure to have Wine Australia present to us. And I'd also like to thank everybody who has attended today. As Peter said, this is my last webinar. I have resigned from WCA and I finish at the end of the month. And I'm passing the baton over to this lovely lady sitting right next to me. As Prue will be taking over from me after 4 years of webinars. That's over 50 webinars that we've produced in the last 4 years, 20 of which have been with Wine Australia. I'd like to take this very quick opportunity to thank the person in the background that most of you don't know who is there, and that is Michael Downey, who is our IT guru schmuru. He's been putting up with me complaining and carrying on and acting like a fool for the last 4 years. So thank you, Michael, and thank you for all your wonderful support in the background. I'd also like to thank Prue, because I know that she's going to do a wonderful job, but please be kind to her because she's probably not as outspoken as I am. And I'd really like to thank every single one of you who keeps coming to these webinars. We have regular attendees every single month that come along, and we're grateful for your support of Wine Communicators of Australia. If you have any topics that you would like us to cover in Wine Communicators of Australia, please send an email to Prue. It's wca@winecommunicators.com.au. We are more than happy to give you content that you want to hear as our regulars that come on to WCA webinars. That's it from me, other than one more thing. Okay, the 8th of August is September, I beg your pardon, is our next webinar, which Prue will be hosting and probably won't get the date wrong. You'll be hearing from Roberta Crouch, who is from the Flinders University, and she'll be doing a topic on how tourists make their destination choices. So please get online right now and register for that webinar. Thanks so much, everybody. That's it from me. Thanks again, guys from Wine Australia, and for everyone attending. Bye for now.
Thank you.